Good evening, this is Rodney with the Triton Wave Market Timing Update for Tuesday, August 14th, 2012. Let's take a look and see what happened in the market today, or what didn't happen in the market. Very narrow range, down at the beginning of the day, and it managed to finish up on the left-hand side. You can see the ES. Very, very narrow range, and it had a little tail off of the 8-period moving average, 8-period exponential moving average. Bunch of tails to the upside, but it doesn't seem to want to go anywhere, even though the waves are going above zero. The waves are all above zero. On the 21-period cash price, let me just arrange this a little bit. According to natural wave cycles, it should have started coming down on the 9th of August. It didn't happen. It went sideways. T1 is curling a little bit above zero, while T4, 3, 4, and 5, 2, 3, and 4 are below zero. We're basically in no man's land. It's kind of like a truck running out of fuel on the highway, and everybody's coming to rescue it, and they don't know how to get rid of it, but it's like blocking traffic. 484 million shares traded. Here's the Vold. Finished on the dead lows of the day. The VIX. Let's plug in the VIX here. VIX finished at the lows. This is like going back 3 years. So you have a non-participating market of dead lows on the vol spread. Wait a minute here. The tick came in at 2 hash marks below 1,000. So that's about 3 or 4 in 4 trading days. So really not too exciting on the ticks. Not too exciting on anything. The VIX, which is implied volatility for the S&P 500 options, puts and calls, are at their dead low for 5 years, 4 or 5 years. So what does all this mean? It means that we have an opportunity to go up, and the bulls can't get it done. We have an opportunity to get down, and go down, and the bears can't get it done. So there's very little volume, very little push. I'll bring over a chart of what's going on with the, this is a daily chart of the Aussie yen cross. And you can see from June it's made its way 50% retracement from March of 2012 back to May, back to the present. So it's about 50%. It looks like it wants to roll over a bit. If this rolls over, if this goes up, risk on is still in effect. If it goes down, risk off is in effect. So this goes down here, market goes down. This goes up, market goes up. Right now, it's doing nothing. 8-10 trading days. The same on the S&P. 8-10 trading days. Absolutely nothing. My thinking is that there is nothing. They would need a major piece of news to move this to the upside, and not very much to move it to the downside. So I still favor the downside here. It's trickling up. It's trying to break through on the, above 1400. It's a little bit of give here tonight. It's up 222 and after hours at about 8:30 Central Time, 8:30 p.m. Central Time. It's been as high as is up 4.5, 5. So they're trying to get something going. If they do, I don't see it getting past 1410, 1412. I've already looked for positions to take on the short side on the ES. getting in, scaling in, and I have a position. Let's take a look at Baidu here. Whoops. I took a position in Baidu not because I like the waves on the upside, because they did get past. Let me stretch that a little bit. They did get past this congestion here up to 130, and actually it was about 130, almost 132 today. 130, 185. But I like the fact that because it went from 100 to 132, it has to come back a little bit. So if you look at this, if you look at the 21-minute chart, this is straight across, just like the Dow. I mean, just like the S&P rather. But unlike the S&P, this nice wave 4, which went above zero on July 18th, is now going below zero on August 10th. So I wanted to watch that and see where it was going. And I like this. I like this for a pullback to about 123. So if you buy slightly at the money, in the money puts, then that's what I'm looking at. In fact, that's what I took a position in today for September. I'm done with August. August may just be flatline right into expiration, and you'll just get burned doing it. So nothing may happen until Thursday, Friday. 3 days that were the opportunity for this to come down hard, which was, to me, Friday, Monday, Tuesday. So far it hasn't happened. So I like Baidu Baidu doesn't look bad on the upside, but I also think it's going to come back a little bit to 7 point move right here on the downside. Always make sure that you have stops in place. If you're using puts, if you're using stocks, have stops in place. Just figure out what your uncle point is and put it in. And when it happens, just let it happen. Don't rewrite the contract and decide that, well, it may happen in 3 or 4 days, because it may never happen. Let's take a quick look at some of these stocks. 59 cents on Goldman Sachs. No change on that. Sideways, making its way up just a little bit at a time. It's still not thoroughly above zero on any of the waves, except for the long wave on the 21-minute. So, and the daily is up, but they're getting kind of peaky, so these could roll over. I'm not convinced either way on my bias for Goldman is actually on the downside. I was trying to make a choice today whether I wanted to play Baidu or Amazon on a put position, and I decided that since Baidu was further away from its 377, it was like way up here. It was like 8 points away from its 377. And Amazon was right at the 377. There's always a chance when it gets to 377 that it could ricochet off that. And even though the T5 on the 21-minute cash is below zero, it could still come down here and whipsaw to the upside, even on the short-term one. And you'd have better entries if you waited just a little bit longer. On the daily, Amazon actually doesn't look too bad. I mean, it doesn't look too bad for the downside. I don't really like it for the upside here. It looks like it's hovering too near zero on some of these waves. So I like Amazon for the downside, but not right here. Apple. Let's take a look at Apple. I thought Apple was going to actually roll over and come down and touch the 377. It looked like it was going to do that because this is a lower peak on the waves and a higher cash price. So 9 out of 10 times this comes down and hits the 377. Didn't work at this time. 1 rolled into 2, T2 rolled into T3, T4 never went below 0, red flag. So I actually had this position on Friday, and when it started going above 0 here, I just got out. And good thing, because it just took off today. Took off for like 8 points. 8 points, finished on the dead high. And I think it's another point after hours. So when you're playing waves rolling into each other, you know, like here on July 26th, T1 rolled up, T2 rolled up, T3, T4, and beautiful, beautiful sequence of waves playing from 574 all the way up even to the first hook on T1 up to 608. That's like a 4-day play, beautiful options play, beautiful stock play. Just doesn't always work out that way, but when it does, it's really, really nice. But the heads up here is if you're playing the rolling waves from T1 all the way down, and the first one starts hooking up to the upside before T4 goes down under 0, it's bail time. It didn't work. Take your licks and move on. It's called trading. Okay, MasterCard made that big leap of 10 points and then kind of went sideways for a while. Down 40 cents today. I don't know what it's doing in the after hours. Hang on. It's not doing anything in after hours. I still like the idea that slowly but surely this MasterCard T5 wave is approaching 0. I love this pattern. It's just one of those things you have to wait for. It's kind of like a surfboard on the ocean. You just wait and you wait and you wait, and this looks like a giant wave that's coming. And when that hits, who knows what's going to happen. But I like this a lot. This is like all these waves, 1, 2, 3, 4, are completely below 0. If I stretch this out a little bit, you can see T1 below 0 for the last 4 days. And T5 is just about to dip its head below 0. When that happens, you just have to synchronize what's happening with MasterCard on the 21-minute here. So right now it's not doing, it's going sideways. So look for T5 to go below 0, and I'll keep you posted on that. So GLD, the gold ETF, I've said in many videos that, at least for the past 10 days, that even though the waves are going above 0, and T3 is even approaching 0, T1 and 2 is completely above it, the cash price on gold, on GLD rather, has gone sideways within the 3 or 4 point range. So it's never broken above this congestion of exponential moving averages. So here we are, we're locked in here, and it just took out 4 days, 5 days worth of trading in 1 day. So down $1.19 today, and basically on the lows. Now, could we have seen this in a daily? I'm sorry, in the 21. Actually, it started off a little bit to the upside, came back down. This is all. This is today. This piece right here, and it actually did come down below the 21 T1. T1 is the first wave. T1 came down to 58.86 and then moved up to 57, and then in the middle of the day just came crashing down. So if we want to look at this specifically, T1 came down at 9:33 this morning Central Time, and then T2 started to go down, and then T3 started to go down. Now by the time they're completely below 0, it's all over. So this was a play, this was an intraday play from 156.90 down to anywhere in this area of the 377. So it's a 1 point play, but nevertheless a play. Obviously, this is a very selective market. The two big players were Apple and Google, and they're everybody's favorite. Google took off a little bit higher than I thought it was going to take off. But then again, the waves were below zero until today. But they were approaching, nope. So this is what this looked like at the close of trade yesterday. So this is what we were looking at the close, and it actually did not look too bad. So if we come out here, that started to the upside already by 9 points at the open. So that's your cue that this is not working if you're short Google. And the wave goes over, you're definitely out. So like I say, sometimes the waves will anticipate which way the stock or the market or the futures are going to move, but sometimes there's outside influences that change all that and make radical and cause radical movements, and the waves happen as the move is happening rather than acting as an early warning system like it does the majority of time. Well, actually, more than majority. Most of the time, it acts as a early warning system. When it gets a little bit price movement gets a little bit jerky like that, there's no way you can tell that that's going to happen. So it's a numbers game. Okay, moving back to the ES, the S&P futures. When it's moving fairly rapidly, there's a lot of, tick movement. There's a lot of vol spread movement back and forth, and there's a lot, and the volume is relatively high, 7, 8, 900 million shares, a billion shares. Then you can use it's easier to trade with the 1597 on the ES as an intraday chart. But however, when it's very slow and painfully slow, then you've got to move out to something a little bit slower, like the 987. So here we have the opening. There's no real plays at the opening here. This is at 8:30 in the morning. There are plays the evening before. Let me see, evening actually from yesterday. Oh, we won't go there. Oops. Okay, so it opens up, hits a 377, bounces back up. It's a 50% retracement from the evening move, and then it starts curling over. The indication is right in here on when the first wave goes, when T4 goes below zero, and also it's crossing the 377. That's your ticket in, and your ticket out is the next wave above it. So you use one way, you use a longer wave to get in, the shorter wave to get out. And that happened right at about 1390.96. And then if you just rode that wave, then you're in it because nothing else went down. So you're still in, or you got out at the close. That wraps it up for today, Tuesday. I'm sorry, Monday for tomorrow, Tuesday. I hope you have a good day trading, and I will see you at the next update. I hope there's a little bit more fun trading tomorrow, a little bit more volatility. Options and volatility go hand in hand. Anyway, good luck trading, and talk to you tomorrow.